That you can translate to about 630 billion Kenya shillings in the 12 months to November 2024, compared to 4.175 billion in a similar period in 2023. So we have seen remittances increasing exponentially. Remittances increased forex inflows into the country, with some going to investment, while others are supporting household consumption of our people. The other macroeconomic factor of note is stability in exchange rates. The exchange rate to the dollar strengthened significantly to 129.4 per dollar. That is 129.4 shillings by end of January 2025, from 160.8 to the dollar by end of January 2024. This rate has since stabilized in the region of 128 to 130 shillings to the dollar. The other factor of note, or macroeconomic factor of note, is our strong official foreign exchange reserves. I wish to state and report to the Kenyan public that our official foreign exchange reserves, as at the end of December 2024, was at 10 billion US dollars, which is 5.1 months of import cover. So this provides adequate buffers and gives market confidence. And you can see that is one of the reasons why we were rated from negative to positive recently by Fitch and Moody's. So it is crucial that this macroeconomic performance must then therefore translate into liquidity. That is a question that many Kenyans have been asking, that we are not feeling the money in our pockets despite the fundamentals showing very positive signs. Bank lending is one channel through which the monetary base would expand and liquidity would be realized in an economy. So given the outcome of inflation, which is now at about 3.3%, the latest data, Central Bank of Kenya has gradually eased monetary policy by lowering the central bank rates from 13% in August 2024 to presently 11.25% in December 2024, and finally down further in February to 10.75%. In addition, Central Bank of Kenya, in the February 2025 Monetary Policy Committee meeting, reduced the cash reserve ratio by 100 basis points to 3.25% from 4.25% to lower the cost of funds for banks. This will further support lowering of lending rates and support growth of credit to the private sector. I would pause there and add that when you reduce cash reserve ratio, it simply means that you are reducing the requirements of how much balances commercial banks need to maintain at the central bank. That would therefore, if you lower it, it means you are releasing more money for banks to loan to the Kenyan public. And that has the effect of improving liquidity. I am informed that this reduction alone would make over 50 billion shillings available to our commercial banks to lend to Kenyans, private businesses, and individuals to carry out business, expand job opportunities, and therefore improve the general liquidity in the economy. Interest rates have declined in line with the easing of this monetary policy. The interbank rates declined to 11.2% by January 2025. Compared to the same period in 2024, that is January 2024, it was at 13.7%. So it has come down by 2.5% and has remained within the prescribed corridor around the CBR. Coming to fiscal discipline of the national government, I want to report here today that because of the discipline, the fiscal discipline that the government has imposed, this has resulted into, one, the 91-day Treasury bill rates have declined to 9.11% in February 2025. In fact, for a very long time, the government papers have never traded at a single-digit percentage. For the first time in a long period, we can see now 91-day Treasury bills trading at 9.11%. This has come down from 16.1% in January 2024. The 182-day Treasury bills rate has declined to 9.85% in February 2025 from 16.2% in January 2024. I would further report that the 364-day Treasury bills rate has also declined to below 11% from 16.4% over the same period. So with the strong easing of monetary policy stance, credit to the private sector is expected to recover as lending rates decline. And therefore, that leads me to report the following: that with the easing of CBR, that is the CBR rates, to 10.75% in February 2025, and reduction in the cash ratio requirement to 3.25% from 4.25%, commercial banks have this week demonstrated lowering of interest rates with higher percentages. Several banks have already reduced their best lending rates. For example, Cooperative Bank of Kenya has reduced its rate from 16.5% to 14.5%. Kenya Commercial Bank has reduced the rates from 15.6% to 14.6%. Equity from 17.3% to 14.3%, among others such as ABSA, NCBA, and many other commercial banks. It is expected that more banks will follow suit. I want to encourage banks to continue lowering interest rates so that more Kenyans can be able to access credit to expand our economy. The reduction of interest rates charged by banks to the private sector is likely to expand credit to private sector, encouraging investments, creating jobs, and improving the general liquidity in our economy. I want to say something about capital markets developments. Notable improvements as investors' activity at the Nairobi Securities Exchange increase. Foreign direct investment flows have increased and shown clear signs of improvement. The Nairobi Securities Exchange has shown demonstrable improvement in investor activities, signaling increased foreign direct investment flows into the country. For example, the NSE 20 share index improved to 2,162 points in January 2025 compared to 1,509 points in January 2024, while market capitalization also improved to 1,983.7 billion from 1,440 billion over the same period. So due to the easing of the food and energy prices as a result of various government interventions, we have also seen a reduction in inflation from a high of 9.6% in October 2022 to the latest 3.3% in January 2025. At the end of 2024, ladies and gentlemen, through the tax laws amendments, the government systematically set in place measures to ease off the burden on the payslip. And I want to emphasize this because there's been a lot of discussion and discourse and talk out there on the issue of payslips. I want to just demonstrate to you that the government is committed towards also addressing the pressures and pains that Kenyans are complaining about. This government is therefore for all Kenyans and continues to expand her implementation of policies meant to promote liquidity. The last point that I will mention is with regards to the pending bills, because this is another area that has led to lack of liquidity in our economy or depressed liquidity in the economy. So the issue of pending bills has persisted despite various efforts and committees established to address it. The failure to settle these bills in a timely manner has significantly affected the financial stability of businesses, particularly micro, small, and medium enterprises, and government image has also been hurt. The urgency to resolve pending bills stems from their adverse effects on businesses the economy and public confidence in our government. Delays in pending bill payment have led to reduced profitability, increased costs of capital, liquidity constraints, and disruptions to operations. Therefore, addressing pending bills is crucial for releasing liquidity, enhancing economic performance, and restoring confidence, particularly among MSMEs. The National Treasury and Economic Planning put in place a committee with very specific terms of reference. The committee has made significant progress, and in the interim, some of the findings or causes of pending bills have been identified, and which include, I will just mention three. One is mismatch between the budget and revenue budgeted by the government on an annual basis. Two, lack of exchequer once approved budget has been executed as a result of mismatch cited above. And finally, the budget cuts during the fiscal year while entities have committed their budgets. The committee has also identified some challenges, such as that some of the pending bills or claims from sugar companies, those relating to employee and labor, require verification at premises of the respective entities due to bulky nature of the supporting documents. The team is about to conclude its work, and to facilitate this, there was an extension of time. It has, however, made significant progress and has also made some interim recommendations to that end. And these include that the government should endeavor to budget within its means. 2, fast-track transition to accrual accounting. 3, implement public investment management regulations to the latter. 4, implementation of e-procurement to ensure all documents are captured electronically. 5, need to negotiate penalties and interest on pending bills in respect of arbitral and court awards. And 6, prioritize settlement of bills related to MSMEs, especially those of businesses owned by women, youth, and persons with disabilities. Injection of monies via the payment of these pending bills will, without doubt, ease things for the Kenyans who we serve. This is why, as the year rolls out in earnest, Kenyans must know that the government has their backs. We are not oblivious to your realities. I want to just hasten to add that the government is working on how to implement the report of this committee to ensure that pending bills are settled. It is not something that is going to be settled in a bullet, because you know we also have fiscal constraints. But I will tell you that the government has already given the National Treasury, through the Cabinet, okay, or green light, to come up with a strategy on how to settle pending bills. You will shortly hear from the National Treasury on how we are going to settle the pending bills as soon as practical. Thank you very much, and that is the end of my statement. So maybe we open it up for questions, unless my PSS, if there is anything to add. Maybe I would give PS National Treasury. You know, I'm just the spokesman of this ministry, but the people who do the work are behind me. I do very little. I only communicate. So I would want to ask PS in charge of National Treasury maybe to take a minute or two to say something that I might have forgotten, or even to expound further on what I've said. And I also have my planning guru here, the PS Economic Planning, Mr. James Muhati will also have a minute or two. Yes.
Thank you, Waziri. I really don't want to add to what you have said, just to indicate that as a team that has been at the National Treasury for the last more than 2 years, we have come out of the worst, in our view. And the progress that the CS has indicated to you is something we continue to see. In fact, this year we have just started very well. and we have seen KRA perform well in terms of meeting its targets. And right now, the macroeconomic environment is stable. You have seen GDP remains at one of the highest in the world, because world growth rate is around 3%, Sub-Saharan Africa is around 3.7%, and ours is at around 5%. We have a diversified economy and resilient. And that's why we always come out of the worst, even when we have shocks. So assuming we don't have any other shocks coming soon, we think that we will continue doing well, and we seek the support of Kenyans in the journey towards ensuring that we have a stable economy that provides for jobs and the rest. So instead of adding more, maybe we give you the chance to ask questions, and then we can help our CS to answer the questions. But maybe, Muhati, you could just add your views maybe on inflation. If you have numbers, what do we see, which areas have come out in terms of cost reduction?
Thank you very much, CS and PS. I think from the economic planning, we can also assure Kenyans that we are very much committed to be able to ensure that our plans are seamless and are properly aligned to the budgets and the available revenue as well. As you are aware, we are also mandated with the responsibility of focusing on the quality of data, which informs most of the policy decisions through the Kenya National Bureau of Statistics. As you have heard, most of the indicators that have been shared together with us as a result of what we have been doing in the State Department for Economic Planning. On matters of inflation, probably just to indicate, as I think CS has mentioned, and I will not be able to repeat, but for the benefits of Kenyans, is to tell you that now, for example, if you look at the cost of living, looking at the basket of goods, maybe if I can pick about 3 of them, we can be able to see that in January 2024, a kilogram of sugar was costing 209.55 shillings. But now it is at 161.34 cents. This is about a decline of 23%. Maize flour was at 175. This is average, 175 shillings, but it's now at 161. When we look at the kerosene, a liter of kerosene in last year, same time in January, was about 195 shillings. But now it is 152, which is a decline of about 22%. Petrol, a liter was 207.97, but now it's at 177 shillings. And a liter of diesel was 197 in January 2024, and now it's at 167.84 cents. These are just among the benefits and the effects and the impacts of the policies that the National Treasury is committed to implementing, as has been articulated by the CS. Thank you very much.
So what we'll do, I'll take some questions, which some I will delegate to my principal secretaries. In fact, even my DGs, if there is a question that I think one of them would address more sufficiently, I will invite them. But at the same time, I'll give them the cover, because I am the spokesperson. But now, because this is just the first among many that we will have, if we can just take maybe 4 questions, I would appreciate. So you'll introduce yourself and the media house, or even if you are general public, you'll tell us you're general public. But I think I'll go for the media. I'll start with you. Your hand was up first. Just give it to him. Then I'll come to you second, 3, 4. Can I see any lady's hand, please? A lady? Yes, I'll give you.
Thank you. My name is John Yorino from the City Mirror. Kenya Power has been recording some nice profits is there any gains in terms of reducing energy costs, especially for steamer in our households and the industry? Number two, with respect to all these incentives, do you have any data showing new production lines being established in the country with respect to creating gainful employment? And if there are any, what are the numbers in the last 12 months?
One question I think I'm asking on behalf of many Kenyans is, this year, should we expect a finance bill? And if not, how does government plan to finance a 4.1 trillion budget, or even plug the deficits thereof, given that we are seeing other subtly introduced taxes and levies coming in through the ministries and the MDAs? Thank you.
Thank you, Bwana CS. I'm Victor Madala from the Star newspaper. My question is around...
I don't think I gave you the mic.
Oh, okay.
I actually indicated you were second, third, fourth, and the lady. If you want me to indulge you, I will. But you must.
Well, hello. My name is Linda Koske from K24 TV. Bwana CS, you talked about... you touched slightly on the dwindling payslip, and I bet everyone was listening to it and listening keenly. But we really wanted to know the tax policies that you're talking about, because you just mentioned that the government is putting in place measures to ensure that this is tackled. But really, Kenyans really want to know how you're going to go about this to cushion them from further raid of the payslip.
Okay, thank you, Waziri. My name is Peter Mboru from Nation Media Group. Two questions. The IMF program is coming to an end this year, and it has been crucial in the budget support previous years. What is the plan by the government? Is there an extension? If there is, what are we looking at? Number two, we are expecting a 4.1 trillion budget in the coming year. We are already struggling in the current year. The CS says KRA is meeting targets, but that's not true. It missed about 163 billion shortfall 6 months to December. So how are you planning to plug? Which figure again did you mention? Sorry, the revenues to December. Yes, 163 billion.
Not accurate, but I will respond to your question.
It's okay. So the question there is, what is the plan to implement this 4.1 trillion budget? Of course, in keeping in line with the President's promise that we want to live within our means. Thank you.
Yes, the gentleman. Then I come back to you for the final question.
Hello, good afternoon. My name is Zakaria Chege from the General Public. I have 3 questions. One, I will direct it to Mr. Waziri. Yes, pardon?
You make them too?
Okay, sure. Number one, if I can make it right, you said that from the last year, the GDP dropped from 5.2 to 4.6, if I'm correct. And my question is, what is the Treasury doing to make that GDP to drop substantially? Number two, I will direct it to the PS economic planning. We know everything is about money. So what is the economic planning with respect to the economic advisor to the president, who is Jonathan D? I know you know him, and maybe you guys do something about that. So what is, my question is, the economy, according to the statistics that the Waziri has given, he's saying that the economy is doing really well, and he has actually given us an example of sugar and other subsidies that are really doing well in terms of the prices going down. So my question is, what is the economic planning doing about the economy? Because I feel the government is not giving us that opportunity for the economy to grow. The economy is not economing, if I can say that. If I may, please, Mr. Waziri, I'm sorry you said I was limited to only 2 questions. Allow me to say this. You also touched... Yes. That is Mr. Waziri speaking. Thank you so much. Mr. Waziri, you said that the government, or rather let me say about the National Treasury, has given that urge to bank loans, to give loans to the Kenyans. But from where I stand, 25% of Kenyans who take loans, they end up being put to CRB. And if they end up being put to the CRB, the loan will not end up being paid, and they'll drag the economy down. So what is the Treasury doing about that to make sure that those loans and the economy, the money flow is coming down, as they said, with the president is from up there to Mamboga. Thank you so much.
I hear you very well. Yes, the last one. My friend, please. Oh, you have moved? Oh, okay. You are being strategic, eh? Thank you.
Executive orders by the U.S. President Donald Trump. We've seen some companies already, NGOs, informing their employees that there is no jobs. What will maybe has the National Treasury evaluated the overall implication of those orders to our economy? Thank you.
Thank you. So I will ask my PS National Treasury just to note that you will address the question of IMF program coming to an end and what we are likely to do. That answer I know is there. James, I'm sure you got your question very well, but even the others that I'll take, if my PSS will feel free to chip in when I give them the platform so that they can improve on my answers. On the issue, the first one by George Oweno, you've asked a question around Oredo. Thank you. So, George, you asked about Kenya Power and Lighting Company, that it has been showing profits. Is this likely to be passed to the general public? Yes, this should be passed to the general public in terms of reduced tariffs. And George, if you are keen, you'll realize that the electricity bills, from the reports I have been going down. But if that is not sufficient enough, the government will take measures to pass the benefits to the consumers, because cost of energy, it's a concern of government to lower the cost of energy to help economic growth. You have asked me whether we have seen improved production in the country, creating more jobs. I will tell you that the answer is yes and the answer is no. We have not seen a lot of expansion in the job market as we would want to see. Why? Because extension of credit to the private sector has been depressed almost throughout the year 2024. And you can see clearly from the data that that extension of credit contracted instead of expanding by 1.4%. The measures that we have taken will definitely allow crowding in of private sector so that private sector can borrow from banks, invest, expand, and create more job opportunities. So we are likely to see the benefits of reduced interest rates in the coming months. Brian Otieno, do we expect a finance bill? Yes. Simply put, it is a constitutional requirement. You know, many Kenyans have been asking why we must always have a finance bill. As a matter of fact, it is provided under Chapter 12 of our Constitution that every year we must prepare a finance bill. What is not a must is to have a finance bill with increased rates of taxation. So no one says that that finance bill must always have increase in our taxes. It can have a decrease, it can remain the same, but we will have to produce a finance bill. However thin, it may even be the size of this, my hand, so long as you have a finance bill to meet the constitutional requirement. So that going forward, and we have started public engagement, you will see. And you asked how we will finance the 4.2 trillion. There is also a misconception in this country that you need a new finance bill all the time to finance the budget. That is not true. Even without a finance bill, we have tax rates that are obtaining. Finance bill only vary the rates, change them, increase, reduce. But we already have a law in place. We have a legal framework for all taxes. So we can use the same tax rates to raise revenue to finance this budget. And by the way, if you look at our projected revenue for this year, the coming year 2025-26, you will see that we are more realistic in our revenue collection. The figure that was provided earlier, especially on ordinary revenue, of 3.018 trillion, has since been revised downwards to 2.835 trillion. So that shows you that the Treasury is walking the talk. We don't want to just say that we have been over-projecting revenue without taking action. We have taken action. Even in the supplementary budget, you will see that we have revised downwards revenue projection to reflect on the reality. Linda Koskea is asking me about the payslip and the tax policies that are being taken or implemented to help cushion Kenyans. Linda, if you are keen enough, when we took the tax laws amendment bill in Parliament, one of the objectives of that tax laws amendment bill was to give some reprieve to salaried Kenyans. And that is why I was very unhappy with people who are distorting facts and inciting Kenyans against that bill, because it was helping cushion Kenyans. If you take, for example, your employment, the contribution to housing levy, contribution to SHA are now allowable for tax purposes. So you don't double tax those amounts. You are saving basically what you were contributing before to those two institutions is saving you at least about 30% for those who are earning salaries of about 38,000 and above. So we will still take other measures that we think would help Kenyans have more money in their pockets. But already there are steps that we took. Now your pension, if you are retiring, you will take your pension home gross. It will not be taxed. So that, to me, is positive. Those are steps that we took in December to cushion Kenyans. So contrary to the perception out there that we were bringing taxes that would burden Kenyans, we brought those proposals which were making Kenyans have more money in their pockets. A question from Mburu was largely on IMF, which my peers will respond to. You are doubting whether KRA has been meeting targets. It is true that in the first 6 months, KRA did not meet the targets, more particularly July, August, September, and also we had a problem in November. But in October, KRA met the target. In December, we didn't meet the target, but the targets were very high. January have shown very positive signs. It is not true that we didn't meet the target by 160, something that was mentioned. The target, we didn't meet target, especially on ordinary. The total revenue target, we missed by 90 billion for the first 6 months. But we hope that this next 6 months we will not miss any target. Zakaria, GDP dropped from 5.2 to 4.6. Now that is growth, not GDP falling. It's simply saying that in 2023, GDP grew by 5.2%, meaning it increased by 5.2. In 2024, it increased with 4.6, which is lower than 5.2. And we have explained, or I've explained rather, why that was so. The civil unrest for about 3 months you don't expect economy to grow when people are all over in the streets. People are not doing businesses. So that contributed to that. And that is simply the reason. Economic planning will respond to you. Banks to give loans. Defaulters. One of the ways of reducing defaulting, there are two, in my view. One, reasonable interest rates charged by banks. The moment banks start lowering interest rates, you reduce the rate of default. Two, the government, which is the single consumer of goods and services, must pay for goods and services supplied to government. So we should not have pending bills. That is why there's a deliberate deliberate steps being taken by government to make sure that we don't accumulate further and even settle the historical pending bills. On the issue of USA and the new president, which is the last one that I'll take, every country acts in their best interests. The US and the government of US will act in what they consider is in their best interests. It is still not very clear the policies and what the US government wants to implement and the cuts. But we are prepared as a government that should the cuts affect some critical services, especially health and agriculture, then we will have to realign our budgets in a way that would help sort out or plug the hole that will be left. It will be difficult. It's not only Kenya which will be affected. US is the world's largest economy. Whatever they do affects all of us. So this is not going to be a Kenya problem. It will be a global problem, but domestically, we must be sufficiently prepared and respond accordingly to make sure that we mitigate the possible effects of those decisions and actions. Otherwise, allow me again to invite PS National Treasury to pick up from where I've left.
I think I will just give some statistics, especially for KRA performance, just for your note. In July, we had a target of 234 billion. We collected 199. So we had a deficit of 35 billion. In August, we had a target of 198 billion. We collected 173. So we missed the target by 25 billion. So you can see the months that we had issues, July and August, we lost 60 billion. And September, which is normally a tax month with a higher target of 247 billion, we collected 236 billion, leaving a gap of only 11 billion. Then October, there was a target of 201 billion, and KRA managed to collect 207 billion. That means it overperformed by about 6.7 billion. In November, it missed by 10 billion. In December, it missed by 16.5 billion. And this January, which I referred to when I talked about earlier, our target was to raise, we were to raise, actually, let me not go through all that. We were to raise 209, but we collected 206, missing by 3.5 billion. And this was because of domestic taxes. There was a change in the tax laws that now require that you pay, if you are collecting excise tax, you have given 5 days instead of 24 hours. So because of that, the money that would have been collected in January now has to be collected in February. Otherwise, this month of January, KRA would have met the target. I just wanted to correct that. Then on the issue of Kenya Power, I also want to add to what CS says, that before, when we started the reforms, Kenya Power was in a bad situation. And the aim was to restore medium-term profitability. So by end of 2022, the liquidity gap that Kenya Power had was 74 billion. Through the reforms that we have undertaken, the gap now is at 18 billion. So, and you have seen the results for Kenya Power. They have recorded 9.9 billion shillings as surplus after tax. And this is just half year. That means if they double, we could get about 18, which will close the gap that we still have, that liquidity gap that we had. If we do that, that means now the consumers can begin to enjoy the profitability that will come. But already consumers are benefiting from the progress made on the macroeconomic stability, especially on the exchange rate, having been brought down from around 160 to 129 over the last almost 1 year. And so consumers, the pass-through effects must be that the bills now must be much better than they were earlier. I want to now talk about the IMF program. The IMF program was approved by the board in April 2021 in the previous government. And the funding was about $2.3 billion. And the main aim of that program was to ensure we do fiscal consolidation, because our debt had been rated high risk. Remember 2013, we had a low risk. By 2018, we had gone to medium risk. And by 2020, we were at high risk. So this program was meant to address debt vulnerabilities, that we reduce debt growing. So the idea was it has to be a revenue-driven fiscal consolidation, meaning we focus more on revenues. And so the program had nine reviews, and when we were in the 5th review, we got a new addition called RSF, Resilient Sustainability Facility, which is focusing on climate. So the whole amount of IMF program now moved from 2.3 to $4.2 billion. We have implemented the program, and you may be aware the board approved both the 7th and 8th review. And now we are remaining with only about $800 million in the 9th review. And that 9th review is yet to come, because we expect the program to end in April. Our intention is not to leave a gap. IMF program is important for us, and the reforms that we continue carrying are our own reforms. And so our desire is that we continue discussing to go into a new program with the IMF. So we will brief you at the appropriate time when we have had discussions with the fund. We are already engaged, but we will brief you more once we have progress made. Thank you very much.
Thank you very much, CS and PS. I think, my friend, your question is very wide. But if you look at what the National Treasury and Economic Planning is doing now, what we've been taken through by the CS and the PS and the teams here, this is basically what is happening in what you are calling the economy. You are not seeing the economy, right? So this is actually that side of it in terms of what exactly is happening based on the interventions that the government is making in the various aspects of the policy. Now, regarding what we do, I just want to answer you maybe in a minute. One is that we set the targets. We set the objectives of what we want to achieve as a country, as an economy. You are aware about the Vision 2030 that was launched in 2008. Part of the targets in that vision was that we would want to grow, to move Kenya from a lower income country to a middle income country, whereby now the standards of living has improved, the per capita income, our rates in terms of mortality and so on have improved. So this is where we are already, this is where we are as we speak right now, that Kenya has already, for example, attained a middle income country. That means then that when you look at the hard work that the team behind you is doing, is that then we are better off. We then lose on a number of other concessions and grants that we get, because then we need to be self-sufficient in terms of our planning. So that's just an example of one of the targets that we set. Coming to this particular time, as a government, there are 5 key objectives that have been set under what we call the bottom-up economic transformation agenda. And these are, among the 5, is one, for example, is to lower the cost of living. So when we focus on lowering the cost of living, the question we ask ourselves then, what is it then, what are the interventions, what are the activities and programs that we need to have so that we can lower the cost of living? Number two is to create jobs or employment. As it is right now, if you look at the statistics, you can be able to see the number of jobs that we are creating in the economy. We come up with what we call the long-term plans, medium-term plans, like the 5-year plan, which now we have used the current objectives of this government to be able to accelerate the objectives of the growth of this particular economy. So we set the objectives, and then we measure, we are able to measure how we are doing through what we call monitoring and evaluation. We look at the impact of our achievement and some of the projects that we have made, and then we also focus on reporting to be able to share or report on what is happening in the economy. I'm sure you are aware of, for example, the economic survey. On a monthly basis, we produce some data, statistics on the CPI, on what we're doing. On a quarterly basis, we have the Kenya Economic Report, which looks at the various policy interventions that the government is making and how the government is doing. And of course, through what the CS and the team has done today, I'm sure we are aware, we've been made aware of how we are doing. Thank you.
So I think with all that, and as I promised, and we promised, my team has promised you, we will be engaging periodically. This is just the first among a series of engagements we'll have, briefings. This will be a tradition. This will not be a one-off thing. So you can hold your horses. Any other issues will be raised when we next appear here. Thank you very much, and God bless you. And God